All right, hello and welcome to a special edition video. I think what I'm going to start doing nowadays is, maybe on a Tuesday and a Thursday, do like a special video, not just a market update video or a scan video, but more or less like internals or just like an interesting ETF or topic or something like that. So yeah, I mean, today's video, what I wanted to bring up was some stuff in the CLO market. I know everybody's like, what's going on with the CLO market? What is the CLO market? I don't even know, but let's talk about it. Yeah, if you like this content, you can like the video and subscribe to the channel. I'll try to do this more often. I'm just starting, so any support would be fantastic. But let's dive right in. So, yeah, I mean, what you see here is this ticker OXLC. It's Oxford Lane Capital Corp. And basically what this company does is they invest in CLOs. So they're collateralized loan obligations. And this is actually one of the riskier, tranches of the CLO market. So, like same thing with, you go to these rating agencies, you got AAA, triple B, C, that sort of a thing. These guys deal with like the equity tranche. So it's not even debt, it's an equity tranche. So it's much riskier, but they provide a much bigger yield. So the yield on this thing is like 25%. But I like to watch this because it's like kind of tells you some internal stuff of what's going on in the market. And it's dumping. So let's take a look at the monthly here, or even the weekly. Yeah, let's do the monthly. So it kind of does this, every what's a 1, 2, 3, 4 years, right? Where it does a dump. 1, 2, 3, 4 years does a dump. Let's see, 1, 2, 3, 4 years does a dump. It's like kind of like clockwork. We had COVID here, something in 2015, pullback. So, it's just something to watch. And then there's a lot of volume coming in here, which is pretty bearish, whenever that volume comes in. So yeah, there's just some cracks in the CLO market. Now let's go to another page. I wanted to show you where this is is this an opportunity, to buy this dip? Let's check it out. So let me see here. Let me move this. Okay, so here's this video. So if you see here, Oxford Lane typically trades, if we go to a 5-year time frame, at a premium to its net asset value, its NAV. So it's typically trading. I mean, you can see here it says the 5-year average is about 13% premium to NAV. And what just happened, really recently is at the lows of that candle yesterday, it was trading at a 20% discount to NAV. That's very rare that happens. That was basically like what happened in 2022. And also, briefly in COVID. So is this an opportunity? Perhaps. I mean, maybe. Let's go somewhere else here. So yeah. So, and now it's back to like a 6% discount to NAV, and it could even still be an opportunity unless it, gets worse. Or is it signaling something is about to happen, in the economy? I'm not sure. But let's look at the rest of the stuff, okay? The rest of the similar kind of ETFs in the same market, not just Oxford Lane, but there's something called EIC. Similar, a little bit less risky. It's also dumping, but it's making a nice move back today. If we go ahead and look at the monthly, a little bit less history, but this volume, it's just very interesting. Like, it tells me, like, I don't know. Whenever you see this kind of volume and the price is not moving, like, there's a big move that could happen. which is really interesting. You know, you see it all the time. Here's an example, like RX. Here's an example on the daily. This you know, volume was spiking and then it does one of these, right? Another stock, volume is coming in, spikes. You know what I mean? So something like this, and you look, especially looking on the weekly time frame, it's kind of just very, very interesting here what's going on in this debt market. So let's check out this one. So Eagle Point, yeah. I mean, this one, if we go to, you know, the pricing information, if we go to the 5-year, here we go, the top right. Yeah, I mean, this is a little bit different. Let's look at since inception. Yeah, in COVID, it was trading at a massive discount, but you know, when things normalize, trades at a 7% premium to net asset value. And if we like look here right now, it's at there's no premium or discount. So is that an opportunity? Perhaps. Yeah, so pretty interesting things going on here. And here's another one I was watching. This one's a little bit worse. This ECC. Okay, these are pretty big moves, like dumps. That I guess, like, I had a buddy of mine, he was telling me basically, yeah, these spreads in the CLO market are widening. So, you know, that's not a crazy call for concern, but, you know, when you see moves like this in debt markets, you know, you just, hey, let's make a video. Yeah, another one that I'm watching is the CLOZ. As you can see, if I look on the weekly, you know, this thing's been fine. And now there's a lot of volume coming in, and it seems to be not doing so well. And this is a little bit higher rated, safer sort of instrument here. And also, if we look at the Mac Daddy, this is the JAAA, the triple A rated, which is it's looking like it's making a little bottom here. But still, when you go to the weekly, there's a lot of volume coming in here. To these CLO products, which is just very interesting to me. So anyways, yeah, just thought I'd share that. And yeah, perhaps those are some opportunities, or perhaps something bad could happen soon. We're going to figure it out, but just thought I'd make a video about it. All right, thanks. Bye.